Hello everybody, welcome to this new supply and demand live analysis from Set and Forget. I'm doing a quick sound check and screen check. Can you see my mouse moving around screen? Can you hear my voice? Okay, perfect. Welcome everybody, lots of people here and new people. Great, everybody can hear me. Welcome John, Michael, Kiran, Jan, Jean, everybody. I can't just say all your names. Welcome James. So, perfect copy. Visual okay as well? Can you see well? So we know how this works. Okay, this is going to be this is not an advanced webinar. This is a webinar that will be covering the basics, and the basics is really important because if you are following me on the Free Forest Factory, you will see that people keep on asking the same basic questions, and I'm always referring to them to the first post where rules are explained there, but it's not easy to read text or even watch past webinars and be able to do things by yourself. It takes time, a lot of time and practice, as we all know. Life is like that, not just trading. I mean, you need to put a lot of work and screen time and working hours in order to be consistent and do the same thing over and over again, thousands of times. So, perfect. Sexy voice, loud and clear. Thanks, James. I wish your name was not James, but Laura or, I don't know, a girl. Coming from a man is not a good thing. Okay. So, you can tell me which pair you want to go through, and then we'll do a top-down analysis using the combination of monthly, weekly, and daily. We're not going to go lower than that. You can go lower than that if you use another sequence like weekly, daily 4 hour, or daily 4 hour, 30 minute, 1 hour, whatever. But we are not covering intraday because Set and Forget is not an intraday community, and I'm not an intraday trader, and I'm not going through intraday trading. You can apply this knowledge and these rules to intraday trading, but it's up to you to take the trades, okay? Because I just don't need intraday trading in my life, okay? Okay, so first of all, somebody said up there the dollar yen. Ryan said dollar yen, and then now Jack said USDX. So I guess that's dollar index. Is that dollar index, Jack? Okay, perfect. And then Turkish lira yen. So I don't have that one on my broker, I believe. So that's a very exotic one. So no, it's a very exotic one. Okay. So the DAX and pound yen. Okay, DAX, pound yen. So we'll go one by one. Okay. So we'll start with we have dollar yen and dollar index. But first of all, let's do the dollar index because it's the main index, okay? So, let me see here because I don't think I have, one sec. Let's do because here they changed the dollar index here. They change it to euro. So we'll do something. First of all, dollar yen, and we'll think of a way of looking at dollar index. Okay, through TradingView and all that, because I'm afraid that if I load another MetaTrader broker, then maybe my computer will start doing silly things. I don't want the webinar to be blocked or have a freeze or whatever. Okay, welcome Jamie. So we have the dollar yen here. This is a monthly time frame, the highest time frame that we are going to use on this sequence. We are going to use the monthly, the weekly, and the daily. Okay, so what is the trend right now on the monthly? Can anybody tell me? Let's do this interactive. Okay, let me change this to red color because I have the white background, so the pointer can be seen better. Okay, perfect. Uptrend. So it's very clear. So if this is an uptrend, in an uptrend, monthly demand areas are respected. New areas of demand are created and respected, and supply areas are taken out. Okay, so we have here supply area right there that has been taken out, and we go and look right. Okay, See, taken out. Just 1 pip means we took it out. So we go down and left and locate the imbalance that caused that break. Okay, so this is the imbalance. Sorry. There it is. So what do we have now? We have monthly area of demand in control. Make sense? Welcome, Face. Makes sense. This is a monthly area of demand. Why? Because rules say that a demand area is created when an opposing area of supply is taken out or a descending trend line is broken. So here, descending trend line broken, monthly area of demand. Okay? See? Descending trend line broken, monthly area of demand. So those are the rules, nothing else. The opposing for supply. So monthly area of demand in control. That took out this area over there. Okay? So it happens that all this area is a 3 months area of supply and it hasn't been taken out. But that's another thing. Okay? It's against the trend as well. So we have now to connect the latest 2 valleys. Okay? So we have here a valley, another valley, and this is a rally, base, rally, CP. So we connect the latest 2 valleys. So now we have an uptrend, as the indicator says here. Monthly is in an uptrend. Make sense? Okay, so Ryan is asking, hasn't the zone been used up for the 3 months? This one you mean? Yeah, it's used up. This is why we are having bigger penetration into the level. When an opposing area is used up normally, not always, the highest odds scenario or the most likely thing to happen is that the area is going to be penetrated even further. But not always. This is trading, probabilities. Okay? So Jurek asking, but this area did not consolidate away. Yes, it didn't consolidate away. It did consolidate away, sorry. Not 1, 2 area. 1, 2 candles, monthly candles that do not touch the base and the departure of the zone. Yeah, not 2 to 1. That's why we require confirmation to go long. Makes sense? Not 2 to 1. Did consolidate away. Confirmation needed for longs. Okay? So, is everything clear that this is a month? Why this is a monthly area of demand, and why we are required to look for confirmation, and why we have an uptrend? Is it clear? Because those are the rules, nothing else. Now you need to have, this may seem very clear and very easy when somebody else's, like me or any other advanced trader, tells you how to do all zones. But in able to do this, it's going to take you a lot of time, minimum between 1 and 2 years. So it may seem a lot of time, but that's how the way it works. Your brain can't process information as fast as you think it should do. Okay? So it's just our limitations. Unless you have a magic pill, that new American series called Limitless, that you swallow a pill and then suddenly all the neurons in your brain are active and you can even see naked people everywhere and see all the cells and everything. That doesn't work. Okay? That's science fiction, not reality. So, monthly area of demand in control. Our bias should be longs or shorts. That's a pretty clear, straightforward question. Longs. If you want to go short, well, up to you. I mean, bias is longs. Longs don't work. Who cares? It doesn't work. The rules say that many of the entries that you're going to have, about maybe 40% or 50% of the trades that you take will be losses, as long as the winners that you have are going to make 2, 3, 4, 5 to 1. Okay, so that's the thing. You have to be able to bear with that in your mind, in your brain. Your ego has to stand that, to understand that, and to live with that. If you just can't live with it, trading is not something that it's for you. I mean, it's the way it works. Okay, you just can't expect to be right always. Weekly. Okay, so here, this is what we have. Faiz is asking, hope at the end, Alfonso can tell me how to get this clean chart template. Currently, I'm using Alfonso background. Yeah, it's simple. I mean, I've just changed the colors here. Background white, foreground black. You just change that, Faiz, and that's it. If I do this, then you get the thing like that, the background. So I just change the color of the candles and all that to have a clean template. And you just change it the way you want. Okay. Hello, Igor. No problem. You're not disturbing. Okay. This may help other people. So this is what we have. Okay. So we have now. What is the trend on the weekly? Can anybody tell me? Up, down. Jack said down. Down, down, down. Faiz said up. So bullish consolidation, Ryan said. So there are three different answers to this. So this shouldn't be possible. I mean, the trend cannot be up, down, or bullish or half a bullish consolidation. It's just impossible. Okay, as you may understand. So there are rules for that, and rules should allow us to tell what is the trend. You just have to ask the right questions to the chart. Like, you look at the dollar yen weekly chart or each time frame like an oracle. The oracle, like the ancient Greek used to use, if you ask the oracle a question, they will tell you the future or what is going on. So here is you have to ask the oracle of dollar yen weekly chart, hey, the oracle, or like the what is the trend here? But he won't answer. He needs more clear questions. So how do we assess the trend? In order to have an uptrend, we need opposing areas of supply taken out and new areas of demand created and respected. If demand areas are not respected, then we no longer have an uptrend. But that doesn't mean that we do have an opposing trend, a downtrend. Makes sense? The fact that we no longer have an uptrend because we are consolidating doesn't mean that we have the opposing trend. Okay? So if you look at, so you have to draw things on the chart. You can use whatever tool you want to use, or just your visual, I mean your eyes, to go through all the candles and see what's going on. Okay, so if you use tools like I'm using this tool that assistant, I don't know how the name of this, it's presentation assistant tool, or tools like Snagit or anything that allows you to draw on top of the chart. So then you have to draw. You can draw things like this. It's a valley. Aren't those two valleys? Yes or no? So drop, base, rally, base, drop, base, rally. Two valleys. So when we have two valleys, what are we forced to do? That. Ascending trend line. It was respected on a third retest and now it's being broken. If an ascending trend line is broken, what do we have after that? Rules are very clear and specific about it. After a trend line is broken, what do we have? Yeah, John. We have a new area of supply created. So once this trend line, once this trend line is broken, we have a new area of supply created. That's how it works. That's the first thing that we get. So we have a brand new area of supply created at 123. That's the way it works. This is the supply. And the other thing is that supply tradable? That's another thing. Okay? We are now trying to locate the levels of supply and demand provided by the oracle on the dollar yen weekly chart and the monthly chart and all that. We're just doing that. Now, on the weekly, we are trying to locate which are the areas that are in control of the new areas of supply and demand, and a new area of supply is created when an ascending trend line is broken, like this one, okay, with a full open, high, low, and close candle. Full candle without touching the trend line. That means that we have a new area of supply, but that doesn't mean that this area is tradable. We'll look at it in a few moments. Okay, that doesn't mean it is a tradable area. We need to make a top-down analysis and make a decision, follow a decision process that will tell us yes I can, no I can, I have to wait. Okay, that's the way it is. So the weekly time frame now it's out of alignment. It no longer can be in an uptrend, because in an uptrend we know that demand areas are respected, brand new areas created and respected. If we have a demand area that has been taken out, like this one, that means, what does it mean? That the uptrend is no longer there. The weekly is out of alignment. Okay? I will answer you now, Jack, okay? Because that's the next thing that I'm going to cover. So, do you see, I mean, to me it's clear, but maybe for some of you it won't be clear, that we have two valleys, one ascending trend line and the trend line broken, creating a brand new area of supply, because a new area of supply is created when an ascending trend line is broken or an opposing area of demand is broken. Those are the two rules, nothing else. Make sense? Is that clear? Yeah, perfect. So this is what we have. This is the most current ascending trend line on the weekly. But now we have something else. If we look now up and left to current price, we stop, and then we see that we have a peak and we have another peak. So when we are allowed to draw trend lines, okay, when we have two peaks, okay, we are allowed to draw a trend line, and we won't have a downtrend until we have two peaks, okay, like that. Let's do it like this, with the second leg of the second peak making a lower low than the second leg of the first peak, and we have an area of demand, okay, demand zone out. That's an uptrend, a downtrend, the definition of a downtrend, one of them, two. So has this scenario happened on dollar yen weekly chart? Welcome, Leonard. Yes, it has happened. So in order to know which trend we have and which levels are created or not respected or taken out, whatever you're going to call it, we have to ask the same, and let me use this bad word, I shouldn't use, the same dumb question every single time. Every single time, you like it or not. Okay, so this is the rule for a new trend happening. The opposing would be for an uptrend. Okay, ascending trend line, two valleys, and an area of supply taken out. Same thing, but now it's happening on the weekly. Makes sense. This is I'm trying to be as clear and as methodical as possible so you can understand the rules very well. Clear? Face? Yes. Perfect. So we have now we remove this trend line. Okay. So now the indicator. This is a new indicator that I created. Okay, but it's just only available now for members on the community. Okay, but it's very simple. We have monthly uptrend, weekly out of alignment. So what does it mean? What does that mean? That if the monthly is up and the weekly is out of alignment, what does that mean? Jack is asking, why is the indicator on your chart did not show that weekly is downtrend? Because I had one sec. That's it. I needed a tick. I needed to update. Okay. And if I have two trend lines, then it will be confused and it won't know which is the trend. So I have to add some keywords to the trend line descriptions and all that, which I didn't do for the sake of simplicity. Okay. So Jamie said, yes, long and monthly demand. Neelam, price may go down to monthly demand to realign with a monthly uptrend. Correct. Jim said, it means on the higher time frame, it's still on an uptrend. and reaches a higher time frame is respected. Exactly. So this is what we have: monthly up and weekly down. But monthly is in control. So whenever you reach this scenario, when you are using a combination of 3 time frames, and we are using here monthly, weekly, and daily. Okay. Whenever you can use, like I said, weekly, daily, or H4. So whenever, if the biggest time frame in your sequence, in this case, monthly, is up, it means that the highest odds trades are on the longs. Make sense? If we go down to the next time frame on the sequence, and this time frame, weekly, okay, it could be daily if we are using the weekly daily for our combination or any other combination, okay, on a sequence. If the one time frame lower than the one that is giving us the overall picture trend, one time frame lower, is broken, the trend is no longer up, rules say, what do rules say? Can anybody tell me? Because this is crucial. This is a very methodical, okay, approach to trading. So, anybody? Phase follow monthly. So don't forget monthly only. Exactly, Jamie. Exactly. So don't forget on the monthly, because the monthly is our time frame, entry time frame. So weekly out of alignment, we can only go long when price hits the monthly area of demand. That's it. If we had monthly up and weekly up and daily down, then we are allowed to go long on the weekly. If the weekly is out of alignment, long on the monthly. If the monthly is out, then we've got a different scenario, monthly consolidation. Okay? Welcome, Adrian. Make sense? That's the way it works. So we've got now the daily. Let's take a look at the daily. Okay? This is what we have on the daily. We have, which trend do we have in the daily? Morning, Philippe. Up, down, consolidation. What do we have? Consolidation, down, two different things there. So let's do this. Okay, let's do the same thing. Let's ask the dollar yen oracle. Okay, dollar yen daily chart oracle. Here we have valley, another valley, another valley. Make sense? So that means that we have an uptrend there, removing areas of demand that remove areas of supply that removed areas of demand. So we now, when that happens, it means that we have created an area of demand, supply, sorry, another area of supply, which is nested within the weekly area of supply that caused the break of that ascending trend line. Okay, makes sense? So this is what we have on the upper side. Okay, so when we look now, that's when we look up and left. This is what we find. Now, hello Marek, we have to look down and left and see where do we have levels of demand. Are there any areas of demand here in this price action area? Anybody? Ryan said no. Nick, no, no. Everybody said no. So there's no demand area there. Okay. If there is no demand area there, okay, if there are no demand areas there, how can we be in consolidation? So no areas of demand have been taken out. In order to have consolidation, we need to have areas of demand taken out in a downtrend. In a opposite, or the opposite. Okay. So James said yes, because of the 3-to-1 rule to supply from the bottom, but we need that rule means that we have to have nothing here to the left, James, which could be this scenario. Look at this box, okay? Now erase this. Erase this box. And then when we have a new area of demand created here with a lot of room to reach up there, more than 3 to 1, then we have demand. But when we look left and we have all this, that rule, the third rule, the clarification rule, does not apply. Make sense? You need to have clear nothing. I mean, a cliff with nothing to the left. Okay, nothing. ERC candles. But now this is just a trading box. Okay. Sarid said it is important that there are very clear swing points on which to base a trend line, which there is not at the moment. Exactly. So if you downtrend but no trade, exactly, Ryan. So this is what we have. Let's zoom out a little bit. Okay. So as we can see, there's a lot of trading here. A lot of trading, a lot of candles there. This is a new area of demand that was triggered there, and then price rallied and rallied and rallied. So since the month is up when price was dropping from there, the idea was to go long on the monthly because the weekly was out of alignment. But rules say that we can set and forget longs on the monthly if the monthly has been created appropriately. I mean, if it has a 2-to-1 imbalance, consolidated away, and also very important that there is a level of demand on our entry time frame. We use the monthly, remember, weekly and daily combination. Okay, so if the weekly is out of alignment but the month is still up and our trading entry time frame is the daily, we go long on the daily time frame. So we have to look for imbalances on the daily. Are there clear areas of demand there to lean on for longs, set and forget? Yes or no? No. Everybody saying no, 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 no. Okay, everybody. So let me show you. You won't be able to see this, but on the recording you will be able. Everybody saying no. So since we don't have any areas of demand, valid areas of demand there, we cannot set and forget. But that's one of the reasons, which is the most important reason not to set and forget here. Now, there's one more reason that we already mentioned it. Apart from too much trading, Nick? Make sense? What do we say? No, the monthly, before it was tested, this level of demand, monthly, did not make 2-to-1. So if a level of imbalance is not a great imbalance, it doesn't comply with the 2-to-1 imbalance, then we need confirmation. There are several things happening now on the markets, like on the pound kiwi and other pairs, which have that scenario with new areas of demand or supply on the daily that did not comply with that rule, and they require confirmation, and they are very low or high in the curve, so not good for taking them. So since the monthly is out of alignment, then we cannot set and forget longs here on the daily. Apart from that, there are no levels to lean on. So there are two reasons, 1 and 2. Okay, two reasons. The monthly didn't make a 2-to-1 RR risk reward. Okay, and there are no areas of demand, clear areas of demand. So two reasons not to go long and wait. Make sense? Clear? That's the way it is. I mean, if I had to sum up the rules for the strategy, it would be just this. We did it in 29 minutes, and that's the way it works. And you could say, wow, it's pretty easy. It's not easy at all, because you can see this as clear as that, because we are going through the rules step by step, and I've been doing this for years, and I know how to do it. But I know for a fact that many other traders out there have been testing the rules, because I always say the same thing: don't do what I say or do, test the rules. Test them yourself, and then you will see that they work or they don't work. But test them yourself. You have to see that working or not me. Okay? So Michael said, clear listening to you requires lots of practice to stay on top of the rule. Exactly, Michael. Jamie, I wish it was that easy. He laughs. But well, that's the way it is. It is. Everything is easy when it's easy, when you have done it hundreds of times. I mean, when you start driving a car on your down, everything's very difficult. But now you can smoke, talk to your girlfriend on the right side. You can, I don't know, take your hands out of the window and feel the wind. You can listen to music. You can eat. You can do all that while you are driving your car automatically. So you need to practice a lot. And when you practice for years, then you will be able to do this automatically. But that requires practice. That's the way it is. I can't change that. And you can't change that. It's the way our brains work. Fortunately or unfortunately, depends on how you wanted to look at it. Nick said, I don't want to be in the car with you. I don't want to be with you either, Nick. You are not the type of man I like. You have no hair. So, morning, Mohani. Okay, so everything's clear now. So here, let me do something else here. We have peak, peak, peak. We could do this. Okay, this is what we have right now. It's still in a downtrend. I mean, the trend, we have removed areas of demand and more than 20 areas of demand. So we are in a downtrend, but this is the latest descending trend line. Okay, the latest. And let me be a little bit more specific. Okay, here. You have to read price very, very carefully. Okay, let me zoom in. Peak, peak. Okay, so trend line. When trend line is broken, what do we have? An area of demand that was tested once, twice, 3 times, 4 times, 5. On the 5th time, it was broken, but no close. Okay, so we have a level of demand there. Makes sense. You have to read price very, very carefully because the break of the trend lines create new imbalances as per the rules. So do we have an area of demand there in control within? It's taken out. It's been taken out already. Okay, but it is within the monthly area of demand. We have a lot of trading potential for longs to go up there. This is also used up. So this is not a zone, okay, but I'm just going to draw this area so you can see that we are in a box range. Makes sense. Price is doing this. Higher high, lower low. Higher high, lower low. Higher high, lower low. It looks like going down, but then suddenly here it goes up. Okay, and suddenly here it goes up. So we are in a trading range. We trade on confirmation on lower time frames, on 4 hour maybe, low in the range and short high in the range, always on confirmation. Okay, makes sense. Fai said, great, got it. Alfonso thought the last valid taken out demand level. Peter, my supply and demand zones chart looks a little different from your chart. I'm using supply and demand zones indicator. Well, if you are using the supply and demand zone automatic indicator, you will never have this, okay? Because that indicator draws levels in a different way using zigzag, triple zigzags indicators, routines and algorithms, and it doesn't take into account if a level has been taken out or if it has a lot of trading, nothing. So the automatic indicator is useless if you want to apply these rules. It can help you sometimes because it is very exact sometimes on some levels, but it doesn't follow the rules. So all the levels are drawn manually. Ryan, this level demand that was taken out without a close, would that make the zone that took it out valid? No, it would make it valid but lower odds. Okay, this one over there. This is lower odds because it couldn't manage to do that, and we have a higher time frame area of demand monthly in control. Make sense, Ryan? France, what is first one trend line? No new low. This is what I mean. France, well, you have rally, base, rally, and there's a lower low here. At least I can see it. See? There. Lower low. So we have, when we have one peak, second leg, the second peak has to make a lower low than the first leg's second peak. Did that happen, France? Yeah, so we have a descending trend line. Did the descending trend line, was the descending trend line broken by a full candle, open, high, low, and close candle that doesn't touch the trend line? Yes, by several. So, new area of demand created as per the rules. Tested, tested, tested. No, there is no rule for that. He's saying he thought you must break low before. No, before the first peak, nothing else. If you want to have this descending trend line from there to there, then we need that this peak goes lower than this. But we created another peak before that, which is this one. So we have this peak and this peak. Then we have this. This is what we have. Well, welcome, France. Let me read. Jim said something. What does it control mean? Control means that price, for example, here, price reaches there. Well, let's do this with the demand area. Brand new area in demand there. Price hits the area, and now this area is in control because price is touching it and it's not breaking it. So this is the latest area in control, this demand area. Okay? If price reaches up there and hits that area of supply, then supply is in control. Why? Because price is within supply, tested supply, it controls price. Okay? Nick, I was looking for longs the break of this trend line. Was my thinking correct? Yes, correct. And what else? France, Faiz asking, what is the criteria of the level that has been taken out? I don't know which one you are referring it. Which level are you referring, Faiz? Morning mood? I don't know what you are, because I've been talking about many other things, so I don't know what you are referring to. If you can explain, I will gladly reply to your question. Current demand level. There's no current demand level. Okay? This is taken out. I just drew it there so you could see that retests. Make sense? I just drew it there. That's over. Okay? Now it's over. Everything clear with this? The bias is longs. We also have, look at this. There are other hints that on the charts, price action now, that is telling us, hey, be careful with shorts. Not only the monthly area of demand in control. Look at this. You see this? No close, no close, no close, no close. You continue. No close, no close, no close, no close. Pink candle, hammer, and monthly area of demand. Do you want to short there? Is it a good idea to short there with a monthly area of demand in control, monthly uptrend, and no closing for weeks? Not a good idea, my friend. Can shorts work? Yes, they can. Yes, they can. But lower probability. If they work, and then you look in hindsight, well, that worked, I should have taken the short, even with a monthly area of demand, because the monthly was not 221, then it was lower odds, etc., etc. You can convince of anything you want yourself. I mean, you can do whatever you want, because your mind is very powerful. It controls your thoughts, everything, your feelings. Your mind controls everything. So unless you have very methodical rules and a very clear trading plan of what you have to do and not to do under certain scenarios, you are gonna blow up your account because you will be thinking or trying to outsmart the markets or your trading plan or the rules that you are trading. So now we have price action is telling us, hey, my friend, don't go short, because we have no close on these candles there. If we look at the daily, we have here no close, no close, no close, no close. If we look at the monthly, we have no close, no close, monthly area of demand and control that took out that area of supply. So why will traders still think of going short? Well, mainly because they don't, maybe because they are not analyzing the chart this way with supply and demand imbalances in mind. They're using other strategies. That's fine, okay? Or they are doing intraday or scalping, which is fine. But by looking at the charts this way, it's pretty clear that shorts are not allowed. Price action is telling us not to go short at all. Makes sense? Philip asking something. Is the lower bullish candle a demand zone or wow trade on daily? Bullish. This one. Are you referring to this one, Philip? This bullish candle or this one? You mean this one? To the right? Is not yet an area of demand, a valid tradable area of demand, because since we have a tested levels in order to have higher probability areas of demand, we need that the opposing area of supply is taken out. Okay, so this will be valid if this is taken out. Makes sense? Because the monthly is tested already. Okay? Well, welcome, my friend. Adolfo, potential daily demand is descending trend line broken. Yes, exactly. That's what we just said. Makes sense? So this is the analysis of the dollar yen. Okay? We have monthly uptrend, monthly area of demand in control that took out, I'm summarizing this area of supply. Weekly, we have weekly downtrend, but price is within a monthly area of demand. So obviously, if price reaches this area over there, don't buy, my friend. Wait for this area to be taken out. Don't be silly and buy into a higher time frame area of supply, even if the monthly is in control. Make sense? If, and this is pretty logical. I mean, pretty logical. If by the time you are there, you are no long and you didn't have any profit of this, why do you want to go long there? Oh yeah, because now we are long, we are strong imbalance there, blue candles or white candles, whatever color you are using for the bullish candles. Now I have confirmation that we are in a trend, in an uptrend. I mean we have to buy, but my friend, you are buying into higher time frame area of supply. Makes sense? If by the time you get there, you have not taken any long for whatever reason, you missed the trade, you were on holidays, you were scared, you didn't see any setups, any reason you may think of, this is too late, my friend. Make sense? Too late. So it's the same like, I don't know, you are driving a car on a motorway, a highway, at full speed, 100 kilometers per hour, 120, whatever miles, kilometers per hour, and then you suddenly, at the end, like, then you see a traffic jam. Okay, a traffic jam. What do? You are getting closer to the traffic jam here, and what do? You accelerate? Come on, that's suicide. Makes sense. You don't have to accelerate. You have to press the brake as fast and as hard as you can, because otherwise you're going to die. Makes sense. You will collide against this area there, this traffic jam, and you will die because you will be driving at 100 miles per hour against cars that are standing still. So the crash will be incredible. You will be dead. Okay? Perfect. Now, it took us like 45 minutes to go through this one alone. So, okay. So we were talking about dollar index, but I don't have it here. It used to be on Hot Forex live account, but now they removed it and are using dollar index with the euro as a base currency, which is crazy. And let me do this. Let me use TradingView platform. and we'll load it here. Dollar index DXY. Okay. Whoops, but this is not dollar index. I don't know, the template is gone. So we'll do it from the beginning here. Monthly, weekly, daily. Okay, make sense? So what is the trend on the monthly? Can anybody tell me? Okay, up. Yep, up, 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 up. Everybody's saying up. So this is what we have. Let's try to look at price here. So we have a previous area here of supply here. Okay, another one there after the trend line break. Another one there. So there was like this one area tested several times. Okay, and it was taken out. Which area took it out? This one. So we have this one area here. And then we have a Marubozu candle at the top. I mean, all these two candles could be considered an area where we don't want to go short against, okay? Obviously, because this is the imbalance that caused the break of this area of supply there, okay? So now we have this one over there on the monthly. Tested on departure, and this is what we have right now. Clear? That's what we have. Why is that supply? Because when it dropped, it removed this demand. Dropped, removed it. Well, it didn't remove it, but it removed this one, sorry. Removed that one, dropped, retested, dropped, another area of supply, dropped. Okay? The trend line was broken and a new area of demand was created. So this is what we have now. Monthly area of supply, tested area of supply, in control. Monthly in an uptrend, we have these here. Uptrend. This would be like a 3 months uptrend. See, no matter how you look at it, okay, we have an uptrend there. Make sense? And this is a very important area of demand. These areas over here. We have also a flip zone. That is a previous area of supply. I was taken out. Okay, let's do like that. And then let's make it hollow. So this one was like taken out right there, out. And which one? That one area. So that means that we have like a flip zone there. Previous areas of supply becoming potentially demand if broken. So we have an area of demand there that caused a break of an area there. So we have a flip zone there. Make sense? So very important area there. So here we have also an important, there as an area was broken and it's acting now, another area of supply was tested and is acting now as support. Make sense? Okay, so this area of supply tested several times, it was broken, okay, and now it is acting as support, but no level of demand right there. Nothing to lean on. If we had had a Marubozu candle, a CP there, then it would have been great to go long, which is what we have on the dollar index. Sorry, the dollar yen. See the difference? On the dollar yen we have that, but on the dollar index we don't. If we had had something like that, better, yeah, perfect. We had that potential area, but didn't consider the way, broke it. It was broken, always short, but no close, no close, no close. I mean, prices looks like reacting again. Okay. Let me read Jim. Why didn't the demand area in 2005 not work? I don't know. That's a very common question that I'm asked. Why didn't an area of demand didn't work? I don't know. Okay, but let me tell. It broke our trend line of the two peaks before. 2005. Which one? This one? You mean this one, Jim? Maybe? So let me do this. Let me draw a trend line there. Okay. Over there. Look at this one. Over there. And now let's do something. Let's go to the 3 months. What do we have there, my friend? A 3 months area of demand. First retest, second retest. So you want to go against that? That's my question. The same rules apply. So when you are trading, when you're seeing that there is a big draw in monthly and it is reacting to something, it's reacting. Why the monthly is reacting? Why? Then you look one time frame higher, and then you will see it, most probably. Okay. So if you look at the monthly, okay, you don't really need to look at the 3 month chart. You know this is a 3 months area of supply, demand, sorry, because we have more than 3 candles. Okay, so it is reacting to that area. Don't go short in that area over there. Okay, there, unless we have confirmation. And then when price returns, since it is the second retest, let me show you. 1 retest, 2 retests. On the third retest, we expect bigger penetration, and we also need further confirmation to go long because we are in a clear downtrend, okay, on the 3 months, and we have removed 1 area of demand, 2 areas of demand, 3 areas of demand, now 4 areas of demand when price goes down there. So long again? No way. So we can have shorts, okay? So now price drops there, breaks the trend line with that candle on the 3 months, and this is a brand new area of demand on the 3 months, retraces, and from there, this is what happened on dollar index. Okay, as you can see, the trend line breaks are very powerful. But if we are in a downtrend, we expect bigger penetration, and we have to wait for a new trend line break. Make sense? Let me read Frank's on. Well, first, Nick, Alfonso, there are 3 sort of basic candles where you drew demand. I always wonder why I want to draw. Which one? Why did you draw the lowest one? This one? You're referring to this one? Yeah, I drew that one because that one is the one at the bottom. One sec. Okay, that is a basic candle, 50% candle, because the distance from the open to the close and to the whole candle range is lower than 50% of the whole candle range. So I know that's the area, and there is another area there, which is the Marubozu. So I think I mentioned it before. When price drops down there, what you can do, I mean, that is the area of influence that caused the break of that. So I'm not going to go short against that. You know what I mean? So it doesn't really matter if you are drawing the zone like this or like that, or the whole 2 areas. What really matters is that this area over there is the one that caused the break of this. So there is a level, like a level on top of levels. So when price reaches that area, flip zone, you are not allowed to go short anymore. So when you have new levels of demand created and all that, then go long. Makes sense. So it doesn't really matter sometimes when you're trading. Entry time frame is the daily, and you're drawing zones on monthly or even 3 months or whatever. It doesn't really matter. You just want the area of attraction. I mean, where the zone is, because you will be, once you are at 10 or 20% low in the curve, price is approaching. If this is the level, okay, if that is the level. When price, let me ask you a question, Nick, or anybody. When price is right there, and this is the previous area of supply, and if we measure Fibonacci from here to here, okay, or the opposite. Let me do the opposite. Otherwise, okay. If this is the top, the area of supply and control, and price was around there, would it be low in the curve or high in the curve? low in the curve. So that's why it doesn't really matter if you draw the level wider or not wider. We are definitely low in the curve, so shorts, okay, are not allowed. Or if you take them, be careful with that. Stop loss more aggressive, take profit more aggressive, take profits and all that, because you are approaching a very important flip zone, an area of demand, which could be like that or like that. It doesn't really matter, and it will also change depending on which broker you have. Okay, because of the GMT server sessions closes and all that. So it doesn't really matter if you're drawing the levels exactly, as long as you know that there is a level there and that you are near the area of influence of that level. Make sense? So don't worry about that. Don't get obsessed about if I drew the level correctly or not. You just have to know that there is a level of demand there, and it can be wider than normal, and you would be too low in the curve with the ascending trend line in control there, not in control, but being holding price, and a flip zone and all that, and a strong imbalance from there. Strong imbalance from there. So low in the curve, forget about it. Probably it would be like a 50% retracement or 61% retracement measured from the previous valley. See, those that trade Fibonacci, look at that, 61.8%. Now holding 38. So those are areas that people trade. I mean, many robots and algorithms created by big institutions and traders and banks or whatever, they're using a lot of algorithms to buy and sell automatically, and they use the Fibonacci and many other tools for take profit, for entry trades, and all that. So when that, we also have zones there that are very powerful as well. You can use Fibonacci as well as an alt enhancer. So this is a 38 retracement and this is a 61 retracement with an uptrend. So price normally holds those areas. Okay, make sense? So this is what we have on the monthly. And now let's do something. Let's make a 5-minute pause, okay? Because it's been 1 hour and I need to drink some water and all that. So 5-minute pause and I will be back with you, okay? Let me see where was this? I don't know where this was. Okay, here. Okay, we're back. So where were we? We were on dollar index, I believe. Yes, this is the monthly chart. Now let's take a look at the weekly chart. Okay, on the weekly chart, which is the trend that we have? Up, down. What do we have? Morning, Al Wafi. Nick saying down. Many other people say down. No problem. So let's do this. We have Elise said sideways. We have a valley here, a rally base, CP, CP, CPs. So we have, like, no matter what we do, we have the trend line broken. Okay, so trend line is broken. So by having the trend line break, we have new areas of supply. And price has been doing that because of that. Okay, this area of demand over there. Let me draw it with this tool better. Like that. Okay, we have that. Let me make it hollow. That one area has been taken out. Isn't it or not? Has that area been taken out or not? It has been taken out. Can we draw a descending trend line on the weekly? Let's ask the dollar index weekly oracle. We have peak. This is not a peak, a valid peak for a downtrend, because it should have made a lower low than the second legs, the first valley's peaks, second leg. Sorry, the genitive sometimes is complex for me since I'm Spanish. So so this is not valid. So like that, like that. So let me make it clearer. we have valley and another valley and middle of a low. What do rules say? Okay, no close below. That's true. Promote. But what rules say about the trend? In order to have a downtrend, we need two peaks, one area of demand, out. Do we have that? Morning Hue? We have that. So we have a downtrend. As clear as that. Nothing else. There is no rules, Ryan, that says a close matters on this scenario. No rule about that. The closing thing is for levels that are not closing or above or below an opposing area, and then you say, I'm going to wait for confirmation because it didn't close. Okay? But just one pip lower, it means that the level is out. Another thing is the quality of that break. Welcome, Pranita. Clear? That's what the rules say. It's not what I say, okay? That's what the rules say. It happens that I have created the rules, but that doesn't mean anything. I always say, and I have repeated throughout this webinar, that don't do what I say or do. Test the rules, and that's what we are promoting always on Set and Forget community, and also on the Free Forest Factory thread. You have to test the rules yourself. You are the only one who can reach a conclusion about this, if this works or not. Okay, not me. So those are the rules for downtrend and uptrend. Trend lines and opposing levels taken out. That's it. Nothing else. Don't add closing or fractals or EMAs or anything. Those are the rules. As simple as that. Don't make it more complex than it is. The quality of the break means that if there is no close, like here, below this area, then it is not, the opposing area that has been created is not that good. Makes sense? Also because of this. What is the trend on the monthly? We're still up. So having weekly areas of supply that do not close below opposing area that has used up, that makes this area up there, okay, over there, low quality. Make sense? It's, to me, maybe it's not to you or to others, that is common sense or more logical, not common sense, but logical. I mean, if we are still in a strong uptrend, 3 months uptrend, monthly uptrend, we can't close below this flip zone. We are creating new areas of supply, but they can't close, they can't close, they can't close. So this area is lower quality. So if prices starts rejecting this area, we could have some nice longs, expecting bigger penetration of that area. Make sense? Behaving like a trading range, like you said. Okay? Okay, perfect. That's Ryan said that is what I was trying to ask about, if the closing matters. The closing matters, but in some scenarios. I mean, for if we have just one pip lower than the zone, that zone is out. Because why should a zone do that? Okay, it's out. Another thing would be that if we are still in an uptrend and the new levels of the supply being created and all that are high quality or lower quality. So, okay. Plus, it's also the second test of a supply zone. Yes. So let's do something over here. Let me finish the daily analysis for the dollar index, and then we'll do something different maybe for some of you, because this is something we do very, very commonly, frequently. Tomorrow we have another session on the community, which is a new type of webinar where it is you who interacts and who does the analysis. And I call this kind of webinars Teach the Dummy Robot. I behave like a robot, a dummy robot, and you have to tell me what to do. And then you have to tell me precisely how to draw the zones, why I should draw the zones, etc. So I will ask for somebody to volunteer today. This is normally something that we do in the community, but so you can see the power of this. And it will be you who does this. You will need a microphone, and you will need a little bit of experience how doing this, okay? Not being the first time, otherwise you're not gonna do it correctly, and you will feel bad, and it's not gonna help you. So if anybody wants to try one of more experienced supply and demand traders, it's fine. Okay. Okay. So I will read you now, but let me continue this. Okay. Can be two people as well, not just one. So what is the trend on the daily? Up, down, consolidation. We need to ask the oracle, like we said before. We have the oracle for the DXY dollar index daily, for the weekly and the monthly. We have to ask, hey oracle, what is the trend here? We have to draw trend lines, zones, etc. Nick says down. So, anybody else? Let's do this. On the way up, okay? Made a higher high. That's on the way up, isn't it? So on the way up, trend line break. And when the trend line broke, we created a new area of supply. What the hell happened there? One sec. It's not allowing me to draw here. New area of supply. So let me do this. Maybe the software isn't there. See? When it's a single candle, we are allowed, the rules say that we are allowed to make the candle even higher, wider, okay? So that's one of the nuances. So price drops from there, and when it drops, it does this. You have to follow price. Broken. When it breaks, it creates a new area of demand. This is what we have. Okay? Now we have this. Price rallied. Let me do all the trend lines and the levels, okay? Because this is what you have to do. Sometimes it's very easy. Sometimes this is rally-based rally. Okay, broke. So if it broke, we create an area of supply that was overshot. Okay, so it was overshot there. So now we have that because we made a higher high. Okay, and there was an area of demand there, but that area didn't, like I said before, the weekly is down. Now the daily is a new area of demand on the daily that caused the break of that area, didn't close. So Ryan, this is another scenario of this. This is just trying to retest the demand area down there. So this is not a valid area of demand, as you can see, because it didn't close above and the weekly is down. Not a good idea if it doesn't close. Okay? So this is a low quality scenario. So now here, this is what we have. You have to read price. One sec. I'm zooming a little bit. So these are the previous two trend lines, and then this is the one, first, second, third, and you have to be doing this. The thing is that once you have the experience, you behave like I was having the other day a session with now a good friend of mine, and I was telling him that you can behave like the Flash. Okay, what do I mean like the Flash? When you have the experience, and I'm sure that many people here in the webinar now, they are more advanced traders like Nick or you or anybody, and many other people, they are also Flash. They are flashers, like the series. Why? Because you don't need to do this anymore. Okay? You don't need to do this anymore. You are the Flash. So what I do is this. With my eyes, I do it super fast. Okay? That requires experience. And when you do that, I don't really need to paint this. Okay? I know that this is an ascending trend line, there is a new area of supply here, there's a new area of demand there because I know visually the trend line break. I just with my eyes very fast. And sometimes I make mistakes because of that. People here now on the chat here, like James or Hugh and Nick, they are sometimes correcting me. Because it's normal to make mistakes when you are trying to be the Flash. Okay, it's a good thing, but it's also a bad thing. But what I'm trying to say is that you can do this very quick, but be careful with that. But you have to read price. In the beginning, doing this is going to give you a lot of experience. So you have now that, you have this trend line, and now we have to assess is here we have two peaks or we don't have two peaks. Okay, so we have here, we have a rally, basis and drops. Basis and rallies and closes with a bullish candle, and then it drops, base, drop, base, drop, base, drop. Okay? So, what do we have here? We have drop, base, drop, okay? CP, CP, CP. 3 CPs in a row. Okay? Descending trend line. That's another rule. Descending trend line. What do we have now, my friends? The descending trend line is broken. What does that mean? And look at this. Let me zoom in a little bit more because you're gonna see something here. Let me see. The high of this candle. The high of this candle is 94.98.2. This one 94.95. This means that this there is made a high. So it just can't be down. Bearish consolidation. That's the conclusion. So by reading candle by candle, drawing the zones, following the rules, asking the same 2 questions over and over and over again, you will always have the right answer. Sometimes the right answer will be wrong because of your understanding of the market, or you made a mistake. Myself, I do a lot of mistakes. It's normal, I'm human. So that's the way it is. But when you ask and you read price, then you get the right answer according to the rules. So these are the 4 latest trend lines. Each time there is a trend line break, we have a level. That level is the other thing that we have to take into account is the tradability of the level. Is that level tradable or not? Because we are in an uptrend, we are in a trading range, we are in the middle of the range, we have a high time frame area supply and control, that is a new area of demand, but we are very high in the curve. No tradable. So there are a lot of pieces that you have to put together in order to make a decision. It's not just one time frame. You have to ask the oracle of the daily, the weekly, and the monthly for if you are using that sequence. Make sense? It's as simple and as difficult as that because it's more difficult than simple. More difficult than it seems. Very easy when somebody else with a little bit more experience than you tells you how that works. But when you are in front of the computer looking at the candles like a zombie, you don't know where to start. But that's pretty normal. And that's going to happen to you for months and even years because that's the way it works. Our minds work like that. Make sense? So now let's take a look at another one. Somebody said the pound yen, but this one I'm not going to do it myself. I'm going to have help from somebody. And Nick wanted to volunteer, and there was another one. Who was it? Ryan, I believe. Ryan, and but you need microphone, okay? Let's try with Ryan and Nick and see how this works. Hopefully the recording will record their voices. Sometimes it doesn't record it. I don't know why. Don't tell me why. Don't ask me why because I don't know. Most of the time it works. But Ryan, where are you? No, but the inbuilt one for the laptop won't work because you will hear Ryan, so we can't do it with you because I will hear the feedback of my voice through your speakers. So it doesn't work like that. You need to have a headset, otherwise it doesn't work well. So I'm afraid we can't go with you. If you have a headset, yes, but the built-in one doesn't work. It will create feedback. So let's try, okay? Now you can speak.
Hello, can you hear me?
Yeah, I can hear you, Ryan.
Yeah, is it clear enough?
Yeah, I believe so. Not as sexy as mine,
Right.
my voice, but it's good.
Okay, cool.
Okay, let me also unmute Nick. If anybody else wants, Nick, where are you, my friend? You're hidden between the horses. Countryside is too big. Okay, Nick, you are there. You can talk. Well, he's not there anymore. Well, you are muted, Nick. So now let's load dollar, no, dollar, no, we said pound yen, okay? So, well, let me do this. It will be faster by typing in the currency pair. Okay? This is the pound yen. Tell me, my friend, what do we have here? You let me will allow you to draw. You will have now a tool where you will be able to draw. Let me, Ryan, where are you, my friend? One sec. There it is. And it will allow you to paint. You should have some kind of tool there, a highlighter or something.
I don't see it yet.
It should be there somewhere. But otherwise you are going to have. It should be there on the toolbox somewhere. But so tell me, what is the trend here? And you can explain me with your words what I have to do.
It looks like it's an uptrend on the monthly, where
It
the
looks
uptrend
like
line.
it looks like, or it is an
It is
uptrend.
an uptrend on the monthly, and an uptrend line can be drawn.
From where to where?
Um, there is. Oh wait, I think I found the highlighter tool. Okay.
Okay.
Can you? Has
You have
this
to.
come on the screen over here?
Yeah, I
Clicking.
can see it.
Yeah.
Now I can see what you're trying to say.
Yeah.
Okay. Okay. So this is the. Okay. So this is the trend line that you see there.
Yes.
Okay. So according to you, we are in an uptrend.
Yes, that's
Okay.
right.
So can you draw me the zones?
Okay, so
Just draw me one area of demand and one area of supply. We don't need anything else on the monthly. That
area of
one.
supply that's being tested right now. Um, and uh, all of this, it looks pretty compressed to me, so I can't find any clear demand since it's not really taken out any supply zone.
Mm-hmm.
Um,
Makes sense.
so the demand zone that I see is around here.
Mm-hmm. Why is that a demand zone?
Because it took out these supply zones and a flip zone around here.
And what? Uh, and a demand area is demand because it takes out a supply area, but
Supply.
flip zone is not within the rules. Okay.
Okay.
But is that supply? And if this is supply, why is it supply? Okay, Nick, you are unmuted, so you can contribute whenever you want.
Okay, I'll just
So
listen
tell
in
me.
for the moment.
Yeah.
You can go ahead, Nick. I'm done with my analysis.
So by Ryan was it? Yes, by Ryan. This is supply. What is supply?
Should I answer or should Nick answer?
You finish.
Oh,
You do the
me?
monthly, and you do the monthly. Nick does the weekly, and then you do the daily.
Okay. Well, actually, it's not clear supply because it didn't take out any valid demand zone.
No. Okay. So then this is valid area of demand.
No, not quite.
And what about you, Nick? What do you have to say about this?
Can you just scroll left a little bit? So I just want to see if that 50% basing candle took any demand out. Is that as far as it goes?
Yep.
Yeah.
Nothing else.
So
All-time lows.
Okay,
At least on
if
this
we
chart.
scroll that far left, then that area did take out some kind of demand, yeah.
So let's see there. See? Now let's do this. This is why isn't this the latest valid area trend line with, I mean, zooming a little bit because otherwise maybe you want to be able to see it. So isn't this one peak, another peak, another peak, and another peak that made a lower low and this low. See, this is the lowest low here. See, let me draw a horizontal line.
Could that
What?
also be a?
Sorry.
Could this also be a trend line?
So the valid trend line here at the moment here would be that. Then once a lower low is made, okay, this is the valid trend line. Agree?
Mm-hmm.
You agree?
Agreed.
That's a valid trend line. So if that's the valid trend line, then we have demand there. Okay? If that is taken out, then we have supply here. If that's supply, then this is demand. Makes sense?
Yes.
But all the pieces of together, once you find the missing piece in the puzzle, everything comes in. You see the things with a different light. Everything like green and shiny, and oh yeah, I'm doing things right. And then things, all the pieces of together of the puzzle are together. So, but you have to read price, okay? And you have to zoom out a little bit. Like it was the first thing that Nick said. Well, do we have something to the left, or is there something there? Nothing. So lowest low in history, couldn't break. Then new area of demand after the trend line break. Okay? And then this is supply, obviously, because if the trend line was broken there with these candles, then this is demand, very wiki, broken. So if this area of demand is broken by 1 pip, then a brand new area of demand is created. So if this is demand created, then it removes supply, etc., etc., etc. And then all the pieces start coming together. Okay?
Okay.
Yep.
Makes
Yeah.
sense? So let me, one sec, let me clean all this. Let me read the questions. Hugh said we could also use the 3-to-1 rule posting supply. Yes, that one as well. From here to there as well, and all that. And then Faiz asking, I think around 1st May there is demand area. 1st May is somewhere. 1st May. Well, I don't see May here. Maybe I lost, but I don't see May. I don't know where May is. April, May here. There as well, inherited area. So, and then Hugh, Alfonso, why was the low with 3 lower wicks a demand zone? Which one? This one over there. Can you explain how this applies August? Okay, this one over there because of the rule that you set, Hugh. 3-to-1. That's the third reclarification type of rule. We are a low, all-time low, so we take that as a potential area, okay, area of demand. But what happened here is that the trend line was broken, okay, and then we create a new. There, sorry, the trend line was incorrect. One sec, let me clean all this. There, like that.
Oh yeah, a bit more aggressive. Yeah.
Okay, so here we have from here to there, pick and pick. Okay, so the demand area is there. So from there, it couldn't close above that area. This is the area, and again by run we have this scenario again there. That basic candle was the one that caused the break of that area of demand, but no close. You see, all-time lows. That's another odds enhancer or limiter for our trades. So we wait for there for confirmation, then price drops and drops and removes those lows. That was a potential area. Okay, maybe I said area of demand, potential area of demand, because there is more than 3-to-1 to the opposing area, and price overshorted, trail line break, new area of demand, new area of demand, new area of demand, new area of demand.
Do we have a bit more of an aggressive trend line down there, right down at the bottom with that engulfing pattern? No close below, all-time lows.
Where exactly? Here?
There's a wild
There.
trade. Yes, yeah.
Yeah.
Yes, the
one.
descending one.
The
No,
descending
the
one.
with the engulfing. Oh no, sorry, didn't make a lower low.
It didn't make a lower low, so
Yeah.
it's impossible.
Bit hard
You have
to
to
see.
wait.
Yeah.
I have to wait. But there will be opportunities here, as we know, of the new rules with the breakouts and all that. So then here, trade, trade, trade. Well, you know, these are more advanced
Yeah.
type of trading. Okay. Okay. So so these areas, once these, this is a very important rule as well. Once this area is the one that causes the break of this area of supply that we all agree that it is now supply, then all the areas underneath become demand, inherited demand. Makes sense? Because they inherit the property of demand caused by this little CP there. So once the trend line is broken, imagine the trend line is broken, all the CPs are negated, and we only trade on confirmation on those CPs or set and forget at the bottom valley that caused the rally, that caused the origin of the imbalance. Make sense?
Yes, it makes sense. Yeah.
That's the way it works. So we have supply area in control that caused the break of this, 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 and I believe something else. This one. Very powerful area. So once we reach that area, what happens? Price is reacting to it. A first retest, second retest, and all that. But we are now in uptrend. So let's make sense, Byron?
Yes, makes sense. Yeah.
Brian, sorry
No,
for
that's fine. Don't worry about it.
pronouncing your name incorrectly. First time I read it. uh, Clever is asking, the candle on trend line broke, it is demand? Which candle? Clever? Tell me the date, otherwise I won't be able to tell you because there are several trend lines, so I don't know which one you are referring to. 100, okay, 95, 97, now 197, 197, there. This is supply, yes, because it caused a break of all this, like we said. If we draw descending trend lines here, okay, then this is demand. Okay, this is supply, so this is demand. So if this area drops from there, removes this area, this inherited area, which is a mess, okay, 1, 2, 3, and then another fourth area here to the left, okay, there. So this is a very powerful area of supply because of that, okay. So let's continue. No, Nick, now your turn. Do you have to add something to the monthly chart, Ryan or Nick?
No, not really. This area over here, it's marked. That's just, it's nothing really, right? It's, you wouldn't even consider it a valley. It's just all compression.
Mm-hmm.
Yeah. Okay. Yeah. That's the only question I had.
What about you, Nick?
I would say we need an ascending trend line. I can't draw, can I? But basically from that circle. Yeah.
Let me allow you to draw 1 sec. A lot of people here. I need to look at you 1 sec. Allow drawing. Now you can draw. But let me change your color.
Don't change it to pink.
To pink.
Oh, I said it. Okay.
I've read your mind. Sorry.
Right. So it'd be something like this. Let's see if
I know you love pink. Come on, accept it.
I can't draw.
Strange, because you are allowed to draw.
Sure.
Well, just tell me where. I mean, the tool.
So yeah, it's a little bit. You know the red circled area that you just drew? There are some valleys.
Where?
Basically.
Here. Yes.
That's one, and then connect it to one of the other two, the latest one.
So, yeah. So we have a valley there. Well, we can do that. I mean, we can. No matter how you draw the trend line.
Yeah, it's still being respected.
It's being respected. Okay. So. So we have. This is what we have, and as per the rules, this is not demand, and this is not demand. Okay, but that's on the monthly. But what's going on? What's going on the monthly, Ryan or anybody that is causing that is holding price from dropping, preventing price from dropping? Brian?
It's touching the monthly EMA, the moving average,
Yep. Something else?
and it's also confluence of the trend line. So both of them within that zone.
Exactly. And then we have two piercing patterns on the monthly.
Yeah.
There. So we have a lot of confluences. So on the monthly, we don't have a real area of demand, but that's on the monthly. We know that we have to analyze at least 3 time frames in our sequence. 3. And then reach a conclusion. Never before that. Okay? So on the monthly, there is no area of demand as per definition, but we have a lot of other enhancers like the trend line, 20 EMA, first hit in years. Look at that. If the monthly 20 EMA hasn't been hit since down there, which is like how many months? 31 months. That means 2 years and a half. First retracement and then price retraces. Second retracement and then price. Second retest and price is retracing again. So here on the way down, see hits, and then creates the new area of demand, and then the price rallies and reverts. Okay, so it's we have that. No way we can short. Okay. So 3 month CP, I don't know. I need to check that. Copy. I will need to check that. But right now we have probably 3 months up there, but not there. I think. Or this is the proximal line of the CP of the 3 months. Maybe all this area. Probably. So a lot of confluences for longs. So what is our bias right now? Longs or shorts?
Longs.
Longs. So that's what we have to do. Look for longs. Make sense?
Yeah.
Okay, perfect. So now, weekly time frame. What do we have here?
Downtrend.
Can you draw?
I'll try. Oh, I know. I've changed it to. There we go. Is that right? Yeah.
Yeah.
Downtrend. I believe that. I'm guessing this is demand, because this looks to be supply.
Yeah. So that one is taken out. So we have descending trend line plus one area taken out. That's what we have. So, sorry. There. Now. Let me clean this. So, which areas of demand and supply? Can you draw me the closest area of demand and supply?
Yeah, we got one here, and obviously one up there.
And the lower one more demand area?
Down, depends. I'd probably draw it like that. Proximal there, distal there.
So this is what we have. Ryan, do you agree with that?
Yeah, I agree with that. Maybe I'll draw the proximal at where it's been engulfed, maybe a little lower.
Yeah.
Since it's, yeah.
As per the rules, it's a little bit lower. But remember what we were talking about before. Once, like we were saying before, once we are around there, okay, this is just too low. So looking too short there is not a good idea, because we are within the range of attraction of this area of demand, you know, very low in the curve. So if by the time, if you are short, for example, if imagine the price rallies into that area and then you go short, or you miss that short because you wait for whatever, or you are not there, holidays or anything, and price is here, you say, oh wow, this is red candles, I'm gonna short here. Not a good idea. If by the time price reaches that area you are not short already, you are too late, my friend. Make sense?
Yeah.
So this is what we have right now on the
this descending trend line here. At the break and the distal. Generally stronger levels when they break the trend line and everything.
Yeah. Fires said too late and cry afterwards. Yeah. So that's what we have. So now we are reacting to a brand fresh well, now it's not fresh, it couldn't make a lower low, to a fresh new area of demand, okay, that caused the break of the trend line and opposing areas of supply, okay, and longs bias, okay. So Ryan, now let's go and do the daily analysis. If somebody else wants to contribute, you will be welcome, okay. Okay, James, he's desperate to be unmuted. I read desperate between your lines, but well, it's not true. It didn't say that. So let me say here, James. You are unmuted, James.
Hello. I've just got a quick comment, and then you can mute me again because I'm knackered. I was tired. Nick said that can you see my cursor? Is that all right?
Yeah.
No, you have to draw. You have to use the highlighter. Now you are allowed to draw. So I didn't give you the pink color. Gave you another color.
Hold on, just let me find.
Gave you black.
I want to find the tools. Where are the tools?
So right click on the screen.
Yep. Oh,
and then go. Yeah.
This here broke this supply here, but as I understand it from our rather lengthy conversation, it's actually this one here.
Exactly.
So the thing is, if this is a downtrend, then we need to check above here, up there to the left, to see whether it took out supply, because if it didn't, then this isn't a downtrend.
Let's check it out. Let's do this. Draw a horizontal line there. Let me make it in another color. Otherwise, it's going to be difficult. And pause it, and then go back.
Now we want to see
that area. This is the area.
Yeah.
And one sec. It started from there to there, more or less. There it is. It didn't accomplish anything. But here we have. So here we have the. Let me draw this. Let me be a little bit mechanical, methodical here.
Yep.
Nothing makes a lower low. So this is a valley, and the previous valley is this one.
Yeah.
So we have this ascending trend line. Okay.
Yeah.
So we have an uptrend up there. This area didn't remove any area of supply, so it wasn't a valid area of demand, as James pointed out. So this is an area of demand. You can draw it a little bit wider if you want. Then we have descending trend line that was broken by this area. This is a level that creates the break of the trend line, and this is the level that the origin of the whole move. So this is not supply. So you are completely right. This is what we have. So this is not a. Sorry.
Go ahead. Sorry.
So this is not a downtrend.
Yeah, that's all I was pointing, because it basically hinges on this. If this if this is,
I remember the conversation. Yes.
Yeah.
Yeah.
If that is demand, then this is the downtrend, but it's not.
It is not. So we have a descending trend line. Yeah, we have a descending trend line, but we don't have a downtrend.
Yeah.
Makes sense, Nick?
Yeah. It's the same result anyway. I mean, we have overextension here. We broke the trend line, so we need to realign.
Yeah.
We realigned.
The result is the same, but that's the way it is. James pointed out. So this is the area that causes the break of the trend line. So right there, special rules can take longs there, and then prices rallying, and probably will retest that area from there. Probably will drop a little bit or even farther down, because it's a very strong departure, but it couldn't remove an opposing area of supply, so demand. Sorry, so it's not that powerful as it may seem at first glance. Make sense?
Is that a monthly bearish engulf by any chance? That weekly drop?
Yeah, but not a good one, because the base is very very wicky.
Yeah.
Look at this one. Didn't work. So we are in an uptrend really, and we may push higher, and by the time it gets there, we will have a bullish engulf against a counter trend short CP against a CP are lower quality, lower odds when we are in an opposing trend, because this is a continuation pattern and not a peak. So if in an uptrend, opposing continuation patterns tend to be removed, but without fighting a little bit. You know what I mean? They fight. and this is the first retracement, second retracement, and but when you look at the lower time frames, when the first retracement happens here on the weekly, okay, do we have an equality level to low long at? We don't have. Okay, the origin of the imbalance is there, so we have to wait for confirmation. So on this way, or also second retracement, then we don't have any real quality area there. As you can see, this is just nothing. The imbalance is here, there, and there. So it prevents, even if we want to go long, we would be prevented of going long in these areas unless we have confirmation for longs. But we'll see that on the daily time frame now when we go through it. Okay, probably. Makes sense, James?
Yeah.
Thanks for the pointing that out.
Well, no,
let me read a few.
Thank you for just letting me bring that in, because after that long thread, Hugh kindly had a chat with me on FaceTime. I asked him for a bit of help, and he helped me a lot. And that's why I spotted that as being not the one that broke it. It's this here. So thank you.
Yeah, no,
thank
no
you
problem.
for that thread.
Welcome.
Thanks, Hugh.
So you can stay there, or if you want me to unmute you, I will mute you.
No,
so let me read it. Let me read here. Hugh, can we draw an aggressive weekly at trail line, aggressive trail line on latest rally? We have 3 CPs. Well, here you mean?
Yeah,
Hugh?
1, 2, 3.
Yep. And that was the weekly area, and that's the retracement. And that was within a monthly area of supply. Yep, that could be possible. And Clever, sorry to bother again. You're not bothering. Is there a male or a female name? Clever. I never see that written. Clever with B. Strange. Or is that a surname? Strange name. Clever name, by the way. So, sorry for that. If you have time, please answer. Portuguese name, man. A man. Okay. Clever. So let me read. If you have time, please answer. Back to monthly supply zone at 197. Yeah. Let me read. Why not a supply at 211? Well, this one you mean? Clever? Yeah, that's another supply, and there's another one there, and another one there. But I just asked them to draw me the previous area of supply on, and then the others on one area of demand below. Otherwise, we could spend like 5 minutes drawing levels that do not make any influence on our analysis right now. Make sense? Because that area of supply will be important when price is there, not now. Make sense? Okay. So, who wants to do the daily now? Anybody? There are 3: James, Nick, and Ryan. Don't fight, don't rush.
I'm gearing myself up for tomorrow, Alphonse. I've had a bad night with Holly, so if I could just sit in the background here, I'd appreciate that.
Well, just sit in the background. You can stand as well if you want. And Nick or Ryan? Ryan will do the analysis.
Yeah,
Sorry?
I already know what to do, so I'll pass it over.
So now, chicken, a lot of chickens here. So
I don't want to ruin this one.
So Ryan, are you chicken or are you not chicken? You are muted. Oh, a muted chicken. Let me see. Ryan, where are you? I don't know because I didn't do anything to unmute you. Ryan, now you can speak.
Hi, can you hear me?
Yeah, I can hear you. Let me answer a clever question. But I don't understand for 187 supply, must look at lower time frame for that supply? No, supply by looking at the time frame where you locate that imbalance. That has nothing to do with any other time frame. Each time frame is an independent object, structure, whatever you're going to call it. This is all you have to take into account in order to analyze the monthly. Nothing else. Lower time frames have nothing at all to do. Make sense? Once you have done the monthly, you go to the weekly, and then you go to the daily, and then you go to the 4 hour, you're trading 4 hour, whatever sequence you're using. Once you have each entity analyzed independently, and you have trend for each of them, then you start putting the pieces together and seeing if they are tradable, they are low, high in the curve, good base, good departure, 2 to 1, consolidation away, blah, 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 blah. Make sense? All that. Perfect. You're welcome, Clever. So, Ryan, your turn.
Yeah, okay.
Do you want the pink color?
Any color is fine. Okay, so to...
I see that Nick doesn't care about it. So he's stealing his color and he doesn't even care.
I trust in my manhood, don't worry.
Okay. Okay. So let's continue. We have like 10 more minutes and we'll be done. Okay? But let's see what happens here.
Now, I see this. Can you see my pen? Has it started drawing? Okay.
Yeah.
One demand zone. And I see this over here as a supply zone because it took out this demand over here, which took out this supply here. And
okay.
As
so
for
stop there. Okay. Like all those old games when we were children, unless in my city, you know, you say stop, like you don't move. So I don't know what is the name of that game in English, but in Spanish, tula. Tula means stop. So stop, freeze, and now, James, you there?
Yeah.
Or anybody?
Yeah.
Can you tell me if what he said is correct?
Not quite. This area here was taken out by this area here on the push down.
Exactly.
What I see is that area there took out this area there, making this inherited supply, that's real supply. Then price comes up, pushes up here. That then takes out this supply here, making that demand. And then that pushes down from there, taking out demand, making this supply there. That's what I'm seeing. Is that good?
Yeah, that's
so.
Much better.
So this here is demand because it took out this supply here. So potentially, well, I suppose if you break the rules a bit, you could look for a wow long here, but you can't quite get can't quite get a trend line in there because you haven't got 3 CPs.
Alfonso, just a quick little tip for anyone who's listening. First thing you want to do when you're looking at a chart is draw the trend lines first, because then you can see which areas broke the trend line and which areas you got supply and demand.
Yeah,
that's a really good tip. I've been doing that, Nick, so thanks for that. I appreciate that.
But yeah, tell everyone before you start drawing levels, draw the trend line first. This here did engulf here, so we did actually make. There is a descending trend line, then there is a wild trend there. Yeah.
Yeah, cool.
And it saves you having to, look at all this and look at all this. It just saves you that much time just by drawing the trend line really quick.
Yeah, that's cool.
Yeah, Hugh just pointed out about the trend line. That it was possible. He was saying that we didn't have any possibility of drawing a descending trend line, but this is a peak.
Yeah, I didn't see that as a peak, but as you say, it's engulfed, so it's certainly not CP. Yeah.
Yeah. So, but it's not because it engulfed, but if you read price, this is a drop, and it bases, and the base is here.
Yeah.
And then why in a base do we close above the whole area?
Yeah.
So it can be a base. It can be a CP. You have to be a drop, a peak.
Yep.
So once it drops like that, creates a peak, lower low there, and rallies, breaks this area. That's how it works.
So I've missed a CP. Oh, I've missed a well long there. There we go. But now we can draw an ascending trend line. There.
Yeah, but do we have an uptrend?
No, because we haven't taken out any supply.
Exactly. In order to have an uptrend, we need an ascending trend line connecting 2 valleys and removing 1 area of supply, or the removal of 2 consecutive areas of supply, without the possibility of drawing an ascending trend line connecting 2 peaks.
Yep.
Valleys, sorry. So let me read a couple of questions here. FICE, why not making 29 September 2015 as demand since the move up towards breaking descending trend line? Yeah, that we have already covered that. So I guess your question is answered. So Pramod, can we trade on inherited level if main level which created inheritance is gone? Trade inherited level if it's a little bit complex. If main level which created inheritance is gone, can you can you can you show me an example? Because I don't get it. If the inherited level is gone, if main level which created inheritance is gone, provided trend line is not broken, original level is gone. If the original level is gone, then the inherited level should be higher. I mean, if this was an inherited level, then the original level is this. So if this is gone, how can you trade an inherited level? So I just don't understand the question. I don't understand it. Sorry. One sec. Let me read something here as well. Reverse. I don't know what you mean with reverse. Inherited levels are lower quality unless they are the original area that causes the break of, causes the whole imbalance. Okay. So that's funny. John said, 3 fat monkeys formed last candle. Should rally. Fat. They look like Balinese monkeys. They are really, really fat. I've never seen monkeys as fat as the Balinese monkeys. It's crazy. They are eating the whole day. They are eating the offers that all the Balinese people are doing to their gods. It's crazy. They can't even hang on the trees. They fall. So it's not. It's true. Huh? So, well, I guess he's playing some jokes with the 3 white horses and of the apocalypse,
Yeah.
and all that. And original level is gone. Whatever thing he means the other way around. So if you want to, well, I will ask him now. One sec. Klaus. Peter said, can you explain slowly again? I'm lost now because we've been discussing about the apocalypse and the monkeys. So if you can tell me what should I explain slowly, Peter? And Klaus asked, do you think it's possible to scalp using the supply and demand? Yes, it's possible.
Yeah.
But remember, this is
chart here.
the thing. The thing is this. I mean, any type of entry. This I mean, price is fractal, and the fractality of price. I don't know if that word exists, but there's a lesson about that, the fractality of price and the multiplier factor. The fractality of price applies to any time frame as long as the fractal factor is similar, okay, to 3, 4, to 1, and all that. The thing is, you just got your license, driving license. Are you going to drive a Ferrari at 300 kilometers per hour, or are you going to drive a Volkswagen that pollutes the a polluting Volkswagen with I don't know 100 horse power? No, how do you say that?
Horsepower. Yeah.
Horsepower.
Horsepower.
What are you going to do?
Yeah.
What are you going to do? You will drive forever until you run out of petrol. That's what you say. So if you are trying to test this strategy or any other strategy, why do you want to test it with full adrenaline and at high speed? It's crazy. I mean, it's not common sense. You should start driving slowly and looking left, looking right if you are going to bump on. If I'm going to crash into a little old woman crossing the road, I mean, you have to look around and see, oh, that I can do, that I can do. But if you are driving at 100 miles per hour in a city, in London, in the city, in the center, you're going to have a problem. Fines, killing people, and all that. So why don't you go slowly and look around, and once you have control of that, then apply it to intraday or even scalping. But then there comes another question. If you are being successful trading 4-hour and daily imbalances and you are earning money, why do you need to go to Lower time frames because because you need the adrenaline, because you think you're gonna make more money. I don't know. It's there could be a long discussion about this, but the rules apply to any combination as long as the fractality factor is respected. Okay, but the lower the time frame, the more levels, the more noise, and the more losses you're going to have. So is your ego and your mind ready to accept as many losses as that you're going to have? That's the question, really. You're welcome, Klaus. Sorry because sometimes I talk too much, but I believe that this is common sense, no? But you can trade any combination. I've traded intraday and scalping with this a long time ago, and it worked really well, but too much stress for me, so I gave up on it. Mahmoud. So let's finish this, and then we'll answer the question. So what trend do we have here, and what is the if-then scenario with all this? James or Brian or Nick? Anybody?
Well, we've currently got this trend line, but we don't have an uptrend until the supply is taken out.
Yep. So we have this. Price is like in the middle.
Yep.
Isn't it? So what can we do?
Yep.
Your bias is long as of now, but you need to wait.
Mm-hmm.
Yeah,
so if-then scenario. Tell me an if-then scenario, James, for example.
If this breaks there, then I'm looking to buy on demand here.
Okay, perfect. Tell me the short scenario.
Well, this is not tested yet, so potentially you could look for a nested 4-hour level in here to go short back down to here.
But would it be allowed to set and forget, or?
Oh no, because it'd be counter trend, wouldn't it? So you'd want confirmation.
Exactly.
4-hour wow short down to that area there.
Okay.
So
good? That's good. What about you, Nick? Nick's not there. So Nick, I think he can't speak. I don't know why. Nick, you are unmuted.
He's back.
So I had wow long down here, and I was triggered there, but I closed it on this here because it was last month, and I was done for last month, so I just closed all my trades. Then I was looking for a 4-hour trade in here, but there's nothing on the 4-hour really there. Then I think there's a 4-hour wow there, but not good formation, so I left it. So right now I'm just doing nothing, just waiting.
Okay, and what about you, Ryan? A wow, Jack. A wow is a more advanced type of trade setup. It hasn't been covered in the free webinars, not because I don't want to cover it, but because if most people that come to the free webinars don't even understand correctly how to draw a trend line and a zone, why should I cover a more advanced trade setups? Silly. So I'm not going to. But then you can say, well, I am a more advanced type of trader, but these kind of webinars have to be addressed to those people that want to learn the basics. The more advanced thing will come later. So I'm afraid I've been also a salsa teacher for many years, and people came to my classes like, hey, I want to learn more figures, more movements with my arms and the legs and all that. They wanted the more complex things. But then you saw them dancing and they were like headless chickens. I mean, we're doing nothing. I mean, but with the arms they were doing everything, but the feet didn't follow the rhythm. So you want to dance, be able to dance well, you have to follow the rhythm. So you have to know the basics very, very well. And just by doing the basics, it's possible to trade. So the more advanced trades like the wows, the pre-CPs and all that, which are new trade setups, they are being only covered on the Set and Forget community, not because I want to sell the Set and Forget community. No, those that know me know that that's not the thing. But it's just useless to cover high, more advanced setups when the basics are not understood. So it stands for wow. Jack is asking for wow. It stands for wow. It's then the setup, because after the trend line break we create this. What is this? W. And after it continues going higher, it creates another one. So the O there when you trade on confirmation. So this is the wow. for the short would be the, I would call it mom, mo. A Mao doesn't sound good. So, but the same thing, the same thing would be like that, okay? So I just left it like that. Wow, it's a nicer name, okay? But the rules are, there are many rules and many scenarios, and these guys are talking about the wow because they know what the wow is, but it's not easy. Because if once you know the wow rules, you will see wow everywhere, everywhere. But they are not valid. Most of them won't be valid. So that's the explanation. Okay, Klaus, you're welcome, my friend. So, Ryan, you were talking, and I interrupted you. I will let you finish.
Yeah, no problem.
Tell me.
I wouldn't, at this point, I wouldn't do anything. Maybe some kind of trade on a short side from here, but the bias is still definitely long. If something nice is created on the way up, then go long till around here.
Yeah, that's the way it is.
You know.
So right now it's very difficult to trade because I know levels on the 4 hour. I don't know the 4 hour. There was this area there. Tested and broken. There we have a flip zone there. Okay, so I think that's everything for today. We cover quite a few, well, not quite a few, but 3 or 4 instruments, but in a lot of detail. So that's it. Hope you had a nice session here and you liked what you saw, and the understanding of the rules is a little bit clearer after this session. Okay, James, thanks for contributing, and
really
you,
good.
Ryan,
Thanks.
and Nick as well.
Cheers, guys.
Now it's time to feed the horses.
Thanks,
Go, please. Okay,
Take
bye-bye. Have a great day.
Bye-bye.
Bye-bye.
Thank you.
care.